It's Thursday, June 23rd, 2022. A lot to talk about today, but I want to start with this. A very, very nice gentleman walked up to me today when I was at the gas station. His name is Jose, so I want to give a shout out to Jose. It was very, very kind of him to come up. He watches the show daily, and it was a real honor, a real privilege to meet Jose today and just talk to him for a few minutes. And he was saying that debt is going to be a big problem for so many people, and that he's paid off his debt, he's putting cash away, and now talking about buying some gold, buying some silver, and just really waiting to see how this all plays out. And this is a gentleman at the gas station with his work truck out there hustling and working hard and paying off his debt, and he is awake and aware to what is happening, and he really represents all of you. He represents myself. We are Americans. We are people out there working hard every day, paying down our debts, trying to get ahead, trying to prepare for what's coming. And Jose sees exactly what is happening. He's watched this whole thing transpire over the last couple years. And, seeing is believing. We started talking about all of this beginning to crumble a couple years ago and it accelerating. And, he sees this, I see this, all of you see this. And it's such an honor and it's such a privilege to talk to people who are awake, who are aware, who are preparing, and people who are working hard, hustling. Again, there with the work truck, gassing up and getting right back out to work. And it makes me feel good. It just reinforces with me that we have people who are preparing, who are awake, and who see the financial danger that is approaching and that is taking place throughout this economy right now. So I just wanted to bring that up and mention that. Thank you so much, Jose, for coming up to me, and thank you so much for watching the show. From there, I had to run some errands today. I took my mother to lunch to a Thai restaurant. And when I got there, the waitress said, look, I'm just going to give you menus. I'm not going to give you the QR code for your phone. She just gave us menus. They're now just giving you a QR code for your phone because prices are changing so fast. And she said that many of the things that are on the menu from day to day aren't on the menu. So if it almost felt like today I was in Venezuela sitting at a restaurant, because prices of food now are changing so quickly that, in Venezuela, they'll just have a chalkboard and they'll just erase the chalkboard and put the new price up. Well, here we just have QR codes. And this is how fast things are changing. It's unbelievable. But let's talk about the markets today. They were up, NASDAQ up nicely. We had a bit of a rally today. But why is that? Where's the good news? Why could the markets possibly be up today? Could it be the Fed in these markets buying? You look at the 10-year last week at 3.5%. Today, as I make this video, 3.089%. Who is buying up all these 10-year treasury bonds? Who is buying these bonds? You know who's buying them. It's the Fed that's buying them. It's just incredible that we are watching now the Fed play both ends of this game. They're playing both sides. At one end, you have them raising interest rates. At the other end, you have them in these markets, in the bond market, buying up. And I think that this is going to be very, very dangerous. I think the outcome of this is going to be extremely, extremely dangerous. This, to me, makes things much, much worse. And it guarantees that inflation isn't going anywhere. Because if they're going to be spending billions upon billions upon billions of dollars buying bonds and continuing to expand their balance sheet while raising interest rates, that means we're going to have higher interest rates and inflation isn't going away. They are really defeating the purpose of raising interest rates. The only thing now interest rates will do is destroy the economy while allowing inflation to continue. It makes no sense whatsoever. It's going to do nothing to stop the problem. In fact, it's going to make the problem much worse because it is going to stomp out this economy, and it's going to stomp out the real estate market while inflation continues to rise. And we're going to be raising interest rates while all this takes place in the economy, in housing. It's going to be a disaster. The hedge today, probability of global recession nearing 50%, Citigroup economists say. We are already in a recession. I don't think we need any economists or anybody at Citigroup to tell us about a 50% chance of recession. Ladies and gentlemen, we are now in recession, and we are heading towards a depression. Isn't it amazing how the Fed has completely got it wrong? All these economists completely getting it wrong. And every day they tell you and I that, well, we could probably avoid this recession. We're not in a recession. It's unlikely. The economy is strong. The consumer is strong. The housing market is going to continue to go gangbusters. Real estate is never going to go down. Buy the dip, buy the dip, buy the dip. These people are always wrong. They're being proven wrong right now. They're going to continue to be proven wrong. And while they do that, people are going to continue to suffer. The average consumer, average American, living paycheck to paycheck, falling farther and farther behind, more and more dependent on the credit cards, the payday loans, the cash advances, balance transfers, you name it. And while all this is going on, while I'm paying today anywhere from $6.20 to nearly $7 for super unleaded here in Coachella Valley, the administration announced today that they're going to send over another $450 million in additional military assistance to Ukraine. Now, I don't get political. I'm not going to get political. But this makes no sense to me whatsoever. People are suffering. People are hurting. People are getting absolutely pummeled with this inflation. And it's going to be nice that they give us this relief on this gas tax, and you're going to save $2.41 per fill up. And I'm sure that's going to help a lot of people, saving $2 or $3 on a tank of gas. But what would $450 million do for the average American right now? You think about the billions of dollars that we're sending overseas, and here's another $450 million going over there, while we have so many people right here, right now in this country who cannot afford to put gas in their cars, who cannot afford to put enough food on their tables. We have adults, parents who are skipping meals to make sure that their kids eat. We have parents having to buy inferior food, processed garbage food, full of fillers and chemicals because it's cheap and that's all they can afford to feed their kids, while we continue to send money over to other countries. Absolutely appalling. Article today on Fox Business says housing cools, mortgage loan size falls. Average loan size right now is just over $420,000. That's down from the peak of $460,000 earlier this year. So what does this mean? It means price growth is beginning to decline. We're going to see big trouble. We've talked about this a zillion times on this channel. Big trouble coming to real estate, big trouble coming to the housing market. And this is just another canary in the coal mine that housing is cooling. And it is going to go into a deep freeze here before you know it. The hedge today, initial jobless claims at 5-month highs as layoffs accelerate. So we got the job numbers in today. These were for last week, came in at 229,000 new jobless claims last week. The week prior to this week, the number was revised to 232,000. And you know that these numbers are completely a joke, completely manipulated. When you look at how they calculate these unemployment numbers, it is not like how they did it back in the 80s. Unemployment would be much, much higher than it is right now. if you've rolled off unemployment, you don't count. If you're coming out of college, you can't get a job, you don't count. If you're an independent contractor, you don't count. There's just so many people that don't count. People who quit looking for a job don't count. So how accurate are these numbers? How accurate is the unemployment number that we're being given every week? I think it's a joke. Very inaccurate. Another article in the Hedge, U.S. PMIs plunged to 2-year lows amid remarkable drop in demand. U.S. manufacturing dropped from 57 to 52.4. U.S. services dropped from 53.4 to 51.6. Yet, markets up today. When you get this kind of news that we're continuing to lose jobs and PMIs plunging, the food crisis, the chip crisis, everything that's going on, you would think that there's no way humanly possible that these markets could be up at this point. I mean, we are in a recession right now, yet the stock market is going up. Again, you have the Fed buying, you have the plunge protection team. There are so many things going on behind the scenes, ladies and gentlemen, and it is really misleading, and it's very, very deceiving to so many people who do not understand how manipulated all of this is. And these people are making huge life-altering financial decisions based on the information that they're getting. They're believing this stuff on the television. They're believing the Fed, who continues to tell them that the consumer is strong and the economy is strong. Who watching this video right now today believes that the economy is strong or that the consumer is strong? Are you doing better today than you were 2 or 3 years ago? Most people would probably say not. There are people out there, there are exceptions, I understand that. But for the most part, most people are doing much worse today than they were 2 or 3 years ago. And we're heading in the wrong direction. I want to talk about an article today also on the Hedge. And I want to paraphrase and just highlight a few things in this article. Doug Casey on crashing markets, commodities, and what happens next. The great Doug Casey, one of the most brilliant minds out there. I think this man lived in 120 countries. I visited 165 countries. They call him the international man. He's a fascinating gentleman, a lot of wisdom, a lot of knowledge. He's been around the block. But I just want to highlight a few things in this article that he was talking about. He said, watch out for the bond market. And most people, including myself, we watch the stock market. And most people are in the stock market and they're watching it. But it's the bond market that really is so dangerous because it's so big. And as Mr. Doug Casey says, it's so overpriced. He says bonds are a triple threat to your capital. And why it's a threat to your capital, he breaks it down. He says first, because of the inflation risk, which is growing. 2, the interest rate risk. He says he expects rates to go up to double, triple, even quadruple from where we're at right now. Now, there's a lot of people out there who said that the Fed would never raise rates. Doug Casey, and this man is wealthy. He's brilliant. He's lived all over the world. He knows these markets. He knows the economy. He expects rates to go up, double, triple, even quadruple. That's unbelievable when you think about where this could all go and how bad it could really get. And then third, he talked about the default risk. So 3 things there, why bonds are a triple threat. And again, 3.5% for the 10-year last week, and now we're at 3.08%. How manipulated is the bond market right now? Who's buying a 10-year at 3.08% when we have inflation at 8.6%? Who would buy this garbage? The only entity that would buy this garbage would be the Fed and the ECB. Doug Casey says, I expect stocks to have a lot further to fall. He goes on to say, look at the crypto markets. They have been devastated. Bitcoin was 69,000, now 20,000. Some cryptos have already gone to zero. Some who thought they were millionaires could wind back in their up in their parents' basement. The hypermania in cryptos peaked with 20,000 cryptos out there, he says. Many or most have no use, no value, such as Dogecoin and many more. On the other hand, blockchain technology, he says, is a real breakthrough. He says he's optimistic about Bitcoin and believes it could go to new highs. So for all the people out there holding Bitcoin, there is hope. Doug Casey, I do believe, owns Bitcoin. He also owns gold. He also owns a lot of mining stocks, junior mining stocks. He owns a lot of different things. But he is optimistic with Bitcoin. Doug Casey goes on to talk about real estate. He says, it is a troubled asset class. It floats on a sea of debt, which has enabled the middle class to live above its means. How many people do we all know who are living way beyond their means? They're leasing the car, huge mortgage on the house, the condo, 5, 6, 7, 10 credit cards. They've got the toys, the boat, the RV, everything is just leveraged. He says when the real estate bubble pops, it will definitely be due to higher interest rates. It will hurt the middle class even worse than stocks and bonds. There are people out there that believe that nothing's going to happen to real estate. Real estate's not in a bubble. Real estate can't crash. Real estate can only go up. These people weren't around in 2008. If they were, they've got a very short memory. But I do remember it vividly. This is going to be much worse, in my opinion. There's just way too much debt out there. The inflation, the debt does not even compare to what we saw in 2008. Just the economic damage that has been done by leaving interest rates at zero for over a decade and keeping rates too low for too long and just pumping trillions of dollars into the economy and into the markets has done a lot of damage. And Mr. Casey says, actions have consequences. Decades of money printing and 0% interest rates have caused higher rates, depreciated money, and have caused an economic depression. The Fed, he says, have painted themselves into a corner. The house of cards has been built much higher than in Volcker's day. So true. So the question is now, what can the Fed do to stop what is about to happen? I don't think they can do anything. Yes, they can reverse course. But by reversing course, you're going to have a Zimbabwe or Venezuela type event happen here in America because you will blow up the U.S. currency. You will cause hyperinflation. If you think inflation is bad right now, reverse course, start printing money, and lower interest rates, and you're going to begin to see what hyperinflation looks like. Something that many people thought never could happen here in America. Well, it can happen here. It's very, very easy to do. Reverse course, pump in a bunch more QE, and lower interest rates, and you're going to begin to see hyperinflation in America. We do not have hyperinflation right now, ladies and gentlemen. We have high inflation. In fact, all-time high inflation. If you calculate the inflation how we did back in the 70s and 80s, this would be the highest inflation America has ever seen. But it is not hyperinflation. We can, and it is possible, we could see hyperinflation in America because all the Fed has to do is reverse course. If they don't reverse course, and they get aggressive with rates, it is going to pound this economy without a doubt. But the tree needs to be shaken out. We've got a lot of dead branches. We have a lot of companies that shouldn't exist right now, and it needs to be shaken out. And it is going to hurt a lot of people. It's going to hurt a lot of businesses. There's no doubt about it. But this is what you get when you take years and years of money printing and 0% interest rates. This is what you get. You're going to have to feel the pain. One way or another, we're going to feel severe pain. I believe the correct thing to do is get aggressive with interest rates. But now we have another problem. The Fed thinks it's sneaky, playing both sides here by raising rates, but expanding the balance sheet. When they said that they were going to contract and shrink the balance sheet, they're expanding it because they're buying up the bonds. The 10-year Treasury bond cannot go from 3.5% to 3.08% in less than a week or a week. That's just not possible in my opinion. There's just not people out there going, I've got to buy a 10-year at 3.08%. Who is buying this garbage? It's the Fed. So they're playing both ends. They're burning the candle at both ends. And, you know, what is going to be the end result of this? I don't know. I've never seen anything like this, where you have a Fed buying at one end and raising interest rates at the other. I don't think it's going to be a good outcome, though. I think that, as I said in the beginning of the video, it's going to hurt the economy. It's going to hurt the middle class especially. It's going to continue to pour gasoline on the inflation because the money has got to come from somewhere, right? So we're going to continue basically more QE by buying up the bond market and raising rates. That's going to hurt everybody, at the same time causing more inflation, while the interest rates hurt businesses, hurt the consumer, destroy the middle class. I don't get it. Comment down below if you figure this out, if you think you know what they're doing, or if you think you know what the end result of the Fed buying bonds and raising interest rates at the same time, what this is going to produce. Please comment down below. I'd love to know your opinion. And how's it all end? How does it all end? Can they continue to kick this can down the road? I don't know. I think people are really getting worn out. And one last thing I'd like to mention, just being out yesterday, I really noticed it. Just being out, people are angry. They look beaten. They look lost. They don't look happy. They really almost look, some people almost look like they're in shock. They look really, really angry and lost, and you can't blame them. People have got to really, really be feeling the pain. I see the cars driving around. I see people at the restaurants just like you, but I've also seen a lot of restaurants go out of business. I've also seen a lot of retailers go out of business. And I also know that a lot of this is supported by credit cards, just like most of you know. You know, people will write in, I see in the comments, oh, everything is great in my town. The restaurants are busy. Everybody's out driving around. Take the credit cards away. And let's see how busy those restaurants are. Let's see how many people are driving around. Take the credit cards away. This credit market freezes up. God help us all. I'm going to leave it there today. God bless all of you. I look very, very forward to talking with all of you very, very soon. We'll see what the markets do tomorrow. It doesn't even matter at this point. The economy is completely in shambles. People are just getting hurt daily now. Does it really matter? I say to myself, does it really matter if the market's up or down? Does it really matter? A few people making a couple dollars in this market, who cares? The majority of this country is getting absolutely destroyed. And I don't think they really care about the stock market now because it's so detached from reality. I'll leave it there. God bless you all.